Okay, let's get going, ladies and gentlemen, with the West Haymarket Joint Public Agency meeting for today. I'm Chris Beitler, and with me is Carl Etridge and Tim Clare. Together, we are the Joint Public Agency West Haymarket Board. Notice our meetings operate under the Open Meetings Law, which is posted in the back of the room. For those of you who may be interested, we invite public comment, most certainly, and we do have a time limit notification. We ask people to keep their total time to 5 minutes on specific items on the agenda. And we ask that those who testify identify themselves for the record. With that, we will start with agenda item number 3, approval of the minutes from the JPA meeting held December 28th, 2017. It's been moved that the minutes be approved.
Second.
Seconded. Moved and seconded. Any further discussion? Call the roll.
Eskridge?
Yes.
Clare?
Yes.
Beitler?
Yes, the minutes stand approved. Agenda item number 4, approval of the October, November, and December 2017 payment registers. Brandon Kaufman's going to present that material to us. Welcome, Brandon.
Thank you. Good afternoon, members of the board. Brandon Kaufman, treasurer at the JPA. So you have before you 3 payment registers, one for October, November, and December. I'll review them on a monthly basis, and if you have any questions, please let me know. October payment register had a total of $380,802.04 in operating expenditures, and $47,685.73 in capital expenditures. Some of the highlights of the operating budget was there was $12,931 for CIP reimbursements. In addition, there's repair and maintenance reimbursements to SMG for $59,125. We had some general liability insurance charged that month, $33,695. $181,725 payment to District Energy for the October bill, which a large portion of that is then paid back from the private sector. And then we had about $89,144 for parking management paid to the city to manage the parking garages. On the capital side, I mentioned there was $47,000 there. The biggest portion of that was there was environmental remediation pieces, and then parking lot design for BNSF lot, and then also I think the final payment for the Alter South cleanup, site cleanup. So that is the October. For November, are there any questions on the October?
Next question.
Okay.
Could you, for the benefit of I guess me or us, could you show us at some point in time what the debits and credits are for District Energy? We've been representing that we get a lot of that money back. A lot of the $181,000 back as paid from the private sector, which is the tenants that are currently occupying it. Could you? But I don't know that I ever necessarily see where those payments are. So if you could show that to us, and then on the repair and maintenance expenditures that you had, 604,774. Are those things that are in relation to the arena itself? Or are they in relation to the area in the arena? Because we've put some money in an endowment to help cover some of the maintenance stuff, and I want to make sure that those monies are being used appropriately for that we're not double paying.
So I'd say the majority of all those expenditures are specifically for the arena itself. So, if you look through the list, we've got elevator maintenance that we have an annual contract on that we're paying. IT maintenance with 5.9's contract, and then the rest, there's HVAC repairs, kitchen hood, so they're just general repairs within the facility that come up on a monthly basis. There's some sidewalk repairs, but I'd say the majority is probably the elevator maintenance, the IT maintenance contract, and then, just different pieces as things come up at the arena.
I guess I just like to see where that distinction is, where that line is, so that we're making sure that the endowment's being used for the endowment purposes, and these are being used for the purpose of, and I'm all for continuing to have a top quality facility, and I think it creates the wow factor, and we need to have that. We've spent a lot of money to prepare it and build it. Let's keep it in good order. But I also want to maintain, our fiduciary duties as well.
Okay, further discussion? Questions of Brandon? Brandon, thank you very much.
He's got 2 more months. Yeah.
Pardon me? Oh, you got 2 more months. I'm sorry. Yeah.
Okay. So also we have before you the 2017 November payment register that has operating expenditures of $305,206.16. And then in capital expenditures of $3,239.82. A lot of ongoing maintenance stuff for the operating budget that month. The primary expenditures, once again, DEC of $180,430.98, and we'll get you a breakdown on those. And then $123,272 for parking management. For the capital side, we've just got some smaller expenditures there of storage and then also environmental monitoring. For the December payment register, we had total expenditures of $9,581,717.47 and capital expenditures of $42,484.25. The largest expenditure that came out for the December payments was debt payments, and those totaled $8,675,348.32, and those cover all of the series from the 2010A, B, C, and then also the 11 and 13 bonds that were issued. In addition, we had the operating increment of $600,000. We had the second quarter payment of $150,000. And then the IMG sponsorship revenue that comes to the JPA that we transfer back to SMG. There's a payment for the second quarter of $270,608. District Energy bill of $182,407.85. And then the other large bill that was included in the December was $116,190.38 for staff support to reimburse the city, and that is for the second quarter. Capital budget, the primary expenses there, once again, we had the parking lot for BNSF, that was at $32,661, and then some PC sports payments for management. With that, I'll stand for any questions on payment registers for those months.
Additional questions of Brandon? Thank you, Brandon. Is there public comment on agenda item number 4?
Jane Kinsey with Watchdogs. I would like to ask that when the board speaks that they would use their microphone because it doesn't always carry out here. Can we expect for in the future that the arena that is supposed to make so much money will be supported, always supported by operation and maintenance? Why are they not paying that themselves? It seems if that was their, if they're so wealthy with income, why do they not have enough money to pay these things themselves? I suppose it was built in that you were going to support it all along, and is this in addition to the monthly or the yearly stipend in the budget, or is that come under that?
So the operation increment, that's 600,000, that's included, that's paid out on a quarterly basis, and that was the amount that was set forth in the budget.
Okay, so that 150 and 270 are the 600,000? Or is that extra?
The 600,000 is the $150,000 payment.
Okay.
The $270,000 payment is the JPA receives the sponsorship money from IMG. That's, I think, around $1,082,000 on an annual basis. And then we return that back to the arena on a quarterly basis.
Besides the 600,000?
In addition.
Okay. So what would you say is actually paid to keep the arena going? If it's 600,000 in the budget, yeah, what's the actual figure?
I guess that's a hard question to answer. When you look at these revenues, and they're flowing into the JPA, but then they go to help support the arena budget. But without the arena, those revenues would never be generated in the first place. So it's a matter of where the revenues are going. A lot of the revenues that go into the JPA are generated from the arena, and without the arena, those revenues wouldn't be coming in. So originally, a lot of this was set up that those revenues would flow into the JPA that could help with the bond coverage on any debt service coverage that we need to. So those revenues flowed in there, and then the increment is then transferred over.
Mm-hmm. So actually, the public should know that they're supporting the arena more than $600,000.
The revenues are generated by the arena, so I'm not sure how. I mean, if you could consider that.
Well, the stipend, you don't want to call it a stipend, but your assistance, monetary assistance, is about $600,000, right?
On an annual basis.
Yeah. Okay. So, are you saying that that's the true figure? Or is there actually more than that?
We budget $600,000 on an annual basis that's transferred over. Okay. In total, the arena budget's 5 to 6 million. It generates approximately $9 million. A portion of that comes to the joint public agency, who then transfers it back to the arena budget.
Mm-hmm. So actually the public isn't going to know that?
It's just, to me, it's a matter of where the money's flowing. Is it flowing into one bucket, or is it flowing into another bucket?
Mm-hmm. Is there a way to explain that in ordinary English? I mean, when you present this, it looks like you are paying out of the arena or the JPA budget mm-hmm. every month or so, which I've seen $150,000 before. Mm-hmm. So, is there a way to explain to the public that we are dividing that into monthly payments rather than in addition to the 600,000.
Perhaps I could meet with you and try to sit down and explain it.
Okay, then I will tell the public.
Thank you, Jane. Is there any further public comment? Seeing none, is there a motion to approve the payment registers?
Second.
Been moved and seconded. Any further discussion? Call the roll.
Eskridge?
Yes.
Claire?
Yes.
Beitler?
Yes, the payment registers are approved. Agenda item number 5, reviewing for a 3-month period the expenditure reports. Again, Brandon's going to lead us through that.
Okay. So you have before you expenditure reports for October through December 2017. All the payments that we just discussed were included in those expenditure reports. You should have operating Phase 1 and also Phase 2 capital reports included. Year-to-date occupation taxes are up at 0.68%. When you compare our occupation taxes to the original projections, right now we're about 25% above those original projections, which corresponds with the year of 2029. So collections are well ahead of where we had originally projected they were at this point in time.
And those collections are the collections that will be used to ultimately pay off the bonds.
Yes, that is correct.
Thank you.
Well, that's very good news. I hope everybody heard that.
Would you like me to repeat my statement? No.
Questions of Brandon? Brandon, thank you very much. Is there public comment on agenda item number 5? Seeing none, no actions required on number 5, so we'll move to agenda item number 6, WH 18-1, a resolution to accept the audit management letter and report from BKD. Chris Linder, our auditor, is going to discuss that item with us. Welcome,
Thank you.
Chris.
Good afternoon. Chris Linder, audit partner with BKD CPAs here in Lincoln, and I just want to first start by thanking the staff here at the city for their efforts in this process with all the things they do to compile the JPA's financials for us to audit. Although we do provide some assistance in putting the deliverable, the document you have in front of you, the numbers and all of the figures are entirely provided by them for us to audit from that standpoint. So we are not determining numbers, helping make adjustments from that standpoint. They are providing us those full figures. So we want to thank Brandon and Mark Lycum and the team here at the city for their efforts in that. I'll touch on a few things, maybe high level, and then see if you have any questions. From an accounting and audit standpoint, really no new standards on either side that had a big impact on our overall approach. So no real changes in content in what you would see in the audit report or the communication letter there. So other than obviously the number changes year to year, we'll touch on a little bit. The form and content of the deliverables would be consistent with what you've seen. The two documents that you would have would be our the financial statements and notes, or maybe the audit report, as you'd consider that, and then the audit communication letter, or maybe a management letter that you've referred to, which is kind of a good guide to walk you through, what the audit approach, what the scope was, and then also maybe a little bit of a roadmap of some items in the financial statements regarding some significant accounting policies, what are considered accounting estimates, and then other matters as well from that standpoint. One thing to note as well, in the financial statements and in the audit report, there are two opinions. The first opinion, just a few pages in, is the opinion on the financial statements. And so that's our opinion stating whether or not the financial statements are prepared in accordance with GAAP for a governmental entity. And so that opinion is an unmodified or a clean opinion. So the financial statements are presented in accordance with the guidelines for a governmental entity. And then near the back of the report is a separate opinion in relation to government auditing standards. And being a governmental entity in the structure of the JPA, this is also required. And what that means, as part of our audit procedures, we're not designing tests to go in and look for non-compliance or in testing compliance specifically, but as part of our audit procedures, if we note something that is something that's an instance of non-compliance, maybe with a state statute or another regulation that would impact the agency's financial statements, we would need to note it as a compliance issue in that opinion as well. So that opinion is also unmodified or clean if you want to consider it from that standpoint. And something else within that opinion, as part of our overall audit approach, we're looking at internal controls from a segregation of duties standpoint, making sure that, you know, the folks with abilities and responsibilities in the cash outflows and cash inflows in those transaction cycles, making sure that segregation is appropriate. And then also if we have significant changes to the financials, meaning that we found errors or misstatements, that would be a control issue as well. If we had those instances, it would be reported as part of that opinion. And also in our management letter, we're happy to report that we did not have any instances from an internal control standpoint that we would need, we would be required to communicate either in that opinion or in that management letter. So again, kudos to the folks here at Finance in having things in order, and also with that having the proper segregation of duties from that standpoint to help maintain the financial records of the JPA. Looking at the financial statements, one thing to note, the financial statements, being a governmental entity, actually, if you look at the balance sheet on page 7, I'll just maybe point this out here. There are 3 columns, and the first column is what you call the project fund. And looking at this, similar to looking at a municipal like a city, municipal government like the city of Lincoln, for example, their funds, the governmental funds, so the city's general fund is reported on a modified accrual basis, which is considered a shorter term focus. Looking at your short term cash, receivables, some payables, but not looking at long term assets and liabilities such as, you know, your capital assets and your long term debt. And so the JPA is very similar to that, where we have really just the one fund here. And then you have an adjustment column to get to your overall, what you'd consider your full accrual financial statements. And the big items, when you look at the agency, obviously are the capital assets, the physical structure of the arena itself, and then the long-term debt associated with that as well. So converting that from a short-term focus to a long-term focus is really the whole reason for having those separate columns. Kind of backing up in the financials, the management's discussion analysis is management's kind of their narrative of some of the financial activities during the year. And this is really the only place in these financial statements where you can look at that 2017 balances on a full accrual basis and then compare that to 2016. So you can see some of the changes from year to year from a balance sheet standpoint, and then also an income statement standpoint. And if there are maybe some significant changes year to year, there's a little bit of narrative describing what that was or maybe what caused that balance to fluctuate from year to year. So from the balance sheet standpoint, really not too much of a change from year to year. The capital assets, you see that balance go down. That's just a function of depreciation. You didn't add a lot of capital during the year. The normal depreciation taken on that is a significant number because of that balance, so that overall balance comes down. From the income statement, not a lot of big fluctuations there either. You saw other program revenues go up, and some of the narrative discusses increased parking revenues as a result of that. And then the endowment contribution that you mentioned earlier was part of the reason for some of those expenses to go up from 16 to 17. After the financial statements,
Right there, is that the reason for the, and I have this circled, the general government expenditures from 16 to 17 are up about $2 million. Is that?
That is, yeah, I don't say entirely, but that is a majority of that reason for that function. And there is, that's on page 5, and then there's a little paragraph there at the bottom which discusses that a little bit for the purpose and nature of that. But yes, it's a good question. In addition then to the financial statements or the footnotes and everything then that's supporting the figures in the financials, if you're looking at a line item and saying, well, what is this? How do we handle this from the agency? In a little bit more detail on assets and debt. Those notes then are carried after the financial statements with a little more information there. A few financial statements just to point out the long-term debt and some of the terms of the various bonds. We have some disclosures there. They're, from a contractual standpoint, maybe some of the more significant or some of the contracts that have a bigger impact on the agency's financial statements are disclosed with their terms in some of the receipts and payments. Related party transactions are obviously an important disclosure item of, what are some of those transactions that have a more significant impact on the agency's financial statements. And then any commitments or contingencies that are considered. We have some general disclosure on those as well as part of that. And I won't go into those in a lot of detail, but give you a chance to look at it. If you have any questions, I'll be happy to answer them. From the communication letter standpoint, I'm sorry, somebody? The communication letter standpoint, again, like I mentioned, the form and content is similar to what you've seen. Nothing in there of real note kind of going through, like I mentioned, the accounting policies, looking at an entity like the agency, that kind of the conversion from modified accrual to full accrual, and then also, revenue recognition for any entity is always a kind of a significant policy of how do we handle that with the occupation tax revenues coming in, and then also some of the revenues related to the premium seating and things, and how is that recognized, versus at a point in time versus over a period of time and things like that. So always from an audit standpoint, challenging that, testing that from there as well. So all of those types of items are in the letter. And again, like I wanted to mention from that control standpoint, did not have anything that we would need to identify in there as a, what you'd maybe hear as a control deficiency. With that, I will open it up to any questions you may have on our audit approach, the financial statements, or our letter.
Okay, any other questions?
Got one.
Yep.
Yeah. So, is there any issue from a accounting standpoint, auditing standpoint, where we have city treasurer, finance director involved with managing both the city and the JPA? Is there any conflict there?
From a conflict standpoint, I don't think you would see it from there. Obviously, part of what was set up early on, understanding that the folks here in city finance would handle the financial transactions for the agency, making sure there was a good process and a good structure in place so that there's a clear delineation between what is city activity and what is JPA agency activity. And so as long as you have that in place to make sure that if there is a payment that comes through the system, that we're able to clearly identify that this is an agency payment or this is a city payment versus, well, that we've got to pull and we've got to kind of figure out what's what. As long as you have that in place, and that was obviously early on, something that took a lot of time on the city's part of getting that set up, and then from an audit standpoint, challenging that to make sure that we felt, again, from that control standpoint, that was good in place. So, again, we feel that process is working kind of as designed and don't have any real significant gaps that would cause an issue in the agency's financials.
Okay, thank you.
Any other questions? Thank you. Is there public comment on this particular agenda item?
Jane Kinsey with Watchdogs of Lincoln Government. So, does the Arena SMG give you the material and you audit them separately, and the Pinewood Bowl separately, and also the Arena finances? Or do you just take their what they give you for information, a total?
The audit report and financials that I'm presenting today are of our audit of the JPA of the agency solely. The operations of the Arena from the kind of the entertainment venue, and then looking at it from an SMG standpoint as well, is part of the city's financial statement audit. And so that again is a separate audit engagement that is performed for the city's financial statements. Looking at that, there is obviously, as part of that, SMG does provide some of that information to test the operational activity of the Arena as part of that audit. This today is solely the activities, the records, and the operations of the JPA.
Yeah, okay. So do you do that also?
We do. BKD does also audit the financial records for the city of Lincoln, which would include the Arena.
Okay, and SMG gives you the figures, or you go into their figures?
They provide us with the financial figures to audit.
So they have their own financial person that looks at that, or manages that and hands it to you?
SMG does, yes.
Okay. Do you know the company?
SMG?
Mm-hmm. I mean, who audits them?
From an SMG corporate standpoint, no, I do not know their overall structure. We only deal with the folks here within the city of Lincoln.
Okay, so it's hard to know.
I'm sure.
Okay. Did you get any, as a city, did you get any information about what the Pinewood Bowl brings in, costs, income expenses, or separate from the Pinnacle Bank Arena, or is it all lumped?
I will state it again, just if I'm allowed to maybe comment a little bit on that side of that here today. As part of that engagement, again, separate from the JPA today, that the financial records that we are looking at, we are auditing, do have a delineation of what is activities for events at the arena, at Pinnacle Bank Arena versus events at Pinewood Bowl, so yes.
Okay. How would Watchdogs find that out?
I believe that would be maybe similar to a Freedom of Information Act request of information like that.
Okay,
But that again, would flow entirely through the city.
okay.
You
When
probably
d-
got that, don't you, Brandon? Yeah, so talk to Brandon.
What was that?
I said Brandon has that information.
I've already asked for that, and I've been told there is no separation. But it seems like this gentleman is stating something different.
Jane, I'm sure we can figure that out. If you want that information, that could be provided to you.
Okay. Ask Brandon, ask you, who?
Pardon me?
Ask Brandon or ask you or the board or what?
Brandon.
Well, Brandon will
Okay. Okay,
be the best one to provide it to you quickly.
okay. Could I have a copy of your audit?
Yes, I believe that the folks here at the city would have
Okay.
copies of the deliverables that
Okay.
were part of public record today.
Thank you.
Yes. Thank you, guys.
Chris, on page 20, you've laid out long-term liabilities.
Yes.
And the schedule for the bond payments, and it includes an interest subsidy column, and there's a footnote on the interest subsidy from the federal government. Is this the best way and the most recommended way to reflect the totality of this schedule? And, we became aware to a certain extent of the possible uncertainty of future subsidy payments. But this is the correct way to reflect it all as in accordance with generally accepted accounting procedures, I assume.
Yes, the accounting guidance would have you detail out the future debt service requirements of the entity in the increments, so it's the next 5 years and then 5-year increments after that, like you see with that. And then what the guidance is not entirely clear on is saying when you have a subsidy situation similar to the agency and similar to some other governmental entities that we have audited that have had this, to state exactly whether or not that additional column for that projected subsidy, if should that be included or not. In our approach, and obviously when we put this, when this disclosure was first added years ago, some discussions were had of, well, do we feel that's information we want to put? And at the time, it really was, because we felt, and the city felt it was better for the reader to really understand, well, are we going to pay the gross amount, or is it really what's our debt service requirement if we're going to consider that subsidy there? And so we do include that information. Then obviously there's a little bit of language saying that because of the nature of this, there's always the chance that based on changes in federal regulations, that the percentage could change or could be sequestered down to go away at some point as well. But looking at what do we truly feel what that projection could be, what are those debt service requirements likely going to be, this is the presentation that it does follow the accounting guidance from that standpoint, and then that column is added more as a preference presentation for the reader to understand.
Okay. And for full disclosure and transparency and all.
Correct, absolutely.
Okay. Any other questions or comments? Any further public comment? If not, is there a motion to approve WH 18-1?
So moved. Second.
Moved and seconded. Call the roll.
Eskridge?
Yes.
Claire?
Yes.
Beitler?
Yes, it is approved. Agenda item number 7, Resolution 18-2, letter agreement between the JPA and the University of Nebraska with respect to suites. And Jeff, you're handling that, okay?
Jeff Kirkpatrick, City Attorney. Let me give you just a little bit of background on this because at least Carl is new to the JPA since it was originally adopted. This is, well, you had an agreement between the university and the JPA when the arena was put together so that the university would use it as their basketball facility. There were a lot of terms that were involved in that. Parking and money transfers back and forth. One of the terms of the agreement was that the university would have essentially ownership of 4 of the suites at the arena, and those were specified. And when this was put together, the university wanted the 4 suites for their use and over time considered how much use they would make of those suites. And as we were prepared to open the arena, they came to the determination that at that point in time, that they really only needed 1 of those suites for the institution's purposes at that time. And so the question then arose of what would they do with the other 3 suites? And they approached the JPA and said, since there's these 3 suites that we essentially want to lease out at this point, you're leasing out all the other ones, why don't you essentially manage those for us and lease those out? And we were very open to that because it gave us the ability to treat their 3 suites and all of the suites that the JPA leases and operates uniformly. And so we entered into an agreement where we would handle those 3 suites for the university, treat them the same as we did ours, but the money would pass through to the university. There'd be a administrative fee for the JPA for administering those, but that money would pass through. The agreement that was signed was for 5 years to give the university the opportunity, after 5 years of operation, to step back and decide whether they wanted to use 2 of the 4 suites or 3 of the 4 suites for the institution. We're coming up on the end of that 5-year period now. The JPA approached the university because one of the companies that was leasing one of the university suites wanted to know well in advance, is it going to be available for us to continue for another 5-year lease? The university considered it, came back to us and said, we're comfortable going forward for the next 5 years with the same arrangement. And so the agreement that you have before you is essentially the same terms that we adopted 5 years ago. There haven't been any significant changes, and the university is comfortable going forward with the same arrangement. With that, I'd answer any questions.
Got that, Carl?
Got it.
Thank you.
Works.
No questions of Jeff?
No.
Is there public comment?
Jane Kinsey with Watchdogs. So how much money is involved?
Well, as I said, we're talking about 3 suites, and I think that all 3 of the suites, and though I didn't check on this, the suites are for varying amounts dependent upon their location. Some of them are rented or leased for $45,000 a year, some are $55,000 a year, and some are $65,000 a year. My recollection is that all 3 of these suites are $45,000 a year, if that answers your question.
Okay, and that goes through the city, or it comes from UNL straight to the JPA?
It goes
Budget.
from the leaseholder. So Acme Incorporated, if they're one of the suite holders, they would pay the money to the JPA, just like all the other suite holders would, and we would pass on to the university their share of that.
Okay, they're like, Acme's like management or
I'm
managing
just using
this?
that as a stand-in for one of the companies or one of the people that lease the suites.
Oh, okay, so the leasing parties.
Party for the
Okay.
the suite holder.
Okay. Are they all owned by the same one?
No, there are 3 separate suite holders.
3 separates, okay. And so how do they pay that monthly or
No, it's an annual payment.
annual? Okay. And that goes into the JPA budget?
It's primarily a pass-through. Like I said, there's, I think, the JPA holds on to 12% of it for administering the suites, but the rest of that would pass through to the university because they own essentially the suites. Goes to the JPA, and then the JPA would write a check to the university. Although, when you look at the agreement between the university and the JPA, there are a number of set-offs, and so you've got money going back and forth. Brandon could speak to that in more specificity, but I don't know how often we essentially settle up with them.
Okay, so Brandon would have that
Should yes.
answer. Okay. So, but you're handling the legal?
Yes.
Your department
Yes.
is handling that? Okay, thank you.
Is there further public comment on agenda item number 6? Number 7? Seeing none,
I
is
have
there?
one question.
Yes. Tim?
Is it okay, I signed this, voted on this the last time. Can I vote on this again? I'm just asking.
Yes,
From a conflict standpoint.
It's understood that you represent the university's interest to some extent. That's why you're on this board. And this,
But it's okay for me
Yes.
to vote? Okay, that's
Yes.
all I want to know.
All right. Is there a motion on agenda item number 7?
So moved.
Second.
Moved to approve, moved and seconded to approve. Further comment or discussion? Seeing none, call the roll.
Eskridge?
Yes.
Claire?
Yes.
Beitler?
Yes, the resolution is approved. Agenda item number 8, resolution 18-3, approving a contract relating to agents.
Good afternoon, Adam Holbeiner with Project Control. I was hoping to have a signed contract today. Unfortunately, I do not, so we would like to bring this back up next month, and I don't see any issues with getting that and bringing it forward next month. So
What are you asking for today?
remove it from the agenda for today, and we'll put it on for next month.
All right. Well, without objection, it is removed from the agenda.
We'll get it cleaned up, Tim.
Get that area cleaned up.
There's an interim promise for a cleanup,
Yeah.
right?
I will
Yeah,
call.
I'll do it on the condition that.
I will call Tom and Steve and beg for cleanup crews. Yes. All right.
All right, so without objection, we'll put it on the agenda for next month. And that leaves us with setting the next meeting date, which without objection will be Thursday, February 22nd, 2:30 p.m., right here. Is that good with you guys?
That's good.
Okay, is there a motion to adjourn?
So moved.
Second.
Moved and seconded to adjourn, call the roll.
Eskridge?
Yes.
Claire?
Yes.
Beitler?
Yes, we are adjourned.